Are you an NRI living in US, Qatar, UAE, Europe or Australia and investing in India? Here are the 6 tax saving strategies that you should use to save some serious money. Number 1, take advantage of DTAA. India has treaties with 90 plus countries, which is known as Double Tax Avoidance Agreement, which is what you can use to avoid paying tax twice. However, remember to file form number 67 in India and then claim tax credit in your domestic country. Point number 2, NRE versus NRO. Know the difference between these two accounts. NRE, the entire interest is tax-free, whereas NRO account, the interest is charged at 30% tax. However, remember to file Form 10F and also the Form Tax Residency Certificate to claim credits in your domestic country. Point number 3, remember that in India carries a taxation rate of 12.5% for long-term capital gains and 20% for short-term capital gains. However, under Section 115F, NRI can have the entire long-term capital gains waived off if they are investing for a period of 3 years, and after the investment of 3 years, if they are reinvesting the same amount within a period of 6 months, it can be entirely, LTCG tax can be practically be zero for NRIs. However, you remember that this amount has to be invested only from NRE account and not from NRO account. Point number 4, don't forget to file your income tax returns. Even if your income is below the threshold amount, filing an ITR helps you stay compliant, especially with regulations like FEMA, and also helps you report all the capital gains, which will allow you to again claim tax credits. If you are an NRI living in US and if you want to invest in Indian mutual funds, be very wary of it, because IRS department treats these investments under PFIC, known as passive foreign investment companies, attracting punitive taxes and compliances. Instead, you can invest in direct stock equities, or you can take advantage of Indian ETFs, which are already trading in domestic stock exchanges in the US. Point number 6, optimize your repatriation to avoid FEMA and tax hurdles. For any inward remittances that you're doing, document the source. And for outward remittances, ensure that you are filing Forms 15CA and Form 15CB. And also plan your repatriation in tranches, especially if you're doing large repatriations across the entire year. Follow us for smart strategies on tax compliances, wealth building, and cross-border investment planning. Thanks for watching.